Hello and welcome. I am Ernie Quigley, the founder and president of Harmonic Timing Newsletters. In W.D. Gann's various stock and commodity courses, he always said, quote, "The most money is made during volatile times, during the completion of major cycles." This video discusses how to capture the power of Gann's elliptical cycles. His major cycles. In 1946, W.D. Gann wrote, quote, "Time is the most important factor in determining market movements because the future is a repetition of the past, and each market movement is working out time in relation to some previous time cycle. A study of the various time periods and cycles will convince you how the grain market repeats the same price levels under the same time periods of some previous cycle." Time was incredibly important to W.D. Gann. It was more important than price. Gann studied the Bible. He, quote, "Every movement in the market is the result of a natural law and a cause which exists long before the effect takes place and can be determined years in advance. The future is but a repetition of the past, as the Bible plainly states. The thing that hath been is that which shall be, and that which is done is that which shall be done. And there is nothing new under the sun." That's from Ecclesiastes. Everything moves in cycles as a result of the natural law of action and reaction. By a study of the past, I have discovered what cycles repeat in the future. Now, Gann sold his courses in 1935 for $2,500 up to $3,500. But we have a forecasting lesson that was central to his number 3 master forecasting course. He sold this course for $2,500 in 1935. He stated in his promotional material that this course included his, quote, "secret discovery of the master time factor and a new way of forecasting by mathematical rules that are simple and practical," unquote. When can you make the most money? There must always be a major and minor, a greater and lesser, a positive and negative. In order to be accurate in forecasting the future, you must know the major cycles. The most money is made when fast moves and extreme fluctuations occur at the end of major cycles, and I have added the emphasis. There was a series of cycles that bottomed in soybeans from 1999 through 2005. The 30-year cycle bottomed in July 1999. The 84-year cycle bottomed in October 2001. The 82-year cycle bottomed in late July 2003. Here we have a chart of soybean prices from January of 1983 to March 2022. Now we have here several of his. Well, first of all, we have the time and the price of these major turning points in the price of soybeans. We have here the major cycles that are outlined. Here we have in July of 1999, there was a low of $4.20. In December of 2001, there was a lower low made at $4.13. There was a 30-year cycle high here in May of 2004. There was a 84-year cycle high here in July of 2008. There was an 82-year cycle low here in February of 1920, and a 7.5-year interval of the 84-year cycle measured from November of 2004 here in August at $16.20. We come down, we had a low here in April, May of 2020, and this was an 84-year cycle from December the December the 1st, 1932. And we have been rocketing higher ever since. Now, we can start with this low here in July of 1999. This was 30 years from the low of October of 1969, which in turn was 30 years from the low of August of 1939. And so this low here in 1999 was a significant low. The 30-year cycle stopped the bear market from May of 1997 just dead in its tracks. The bull market, 2.5 years later, in December of 2001, this low right here, Gann's 84-year cycle, measured from the spike high of February 1918, bottomed and turned up. This is why it is so important to have this past data. We have data, soybean prices, from 1913, October of 1913 to the present time. And you never know that this low here was an 84-year cycle, one complete 84-year cycle from the spike high of February 1918. And so we have this spike high. The bull market from December of 2001 lasted for 2.5 years. It made a spike high during May of 2004, and that was a 30-year cycle measured from June 1973. Again, June 1973 was a major spike high. The soybeans had rallied to a new historic high at that time of $10. And so we had a 30-year cycle from June of 1973 in May of 2004. Now, these major highs and lows clearly show that the most money is made when fast moves and extreme fluctuations occur at the end of major cycles. Now, we had a low here in September of 2006, and I'm sorry, I did not put in here what the cycle that was. I remember right, it might have been the 82-year cycle that made this low here in September of 2006. The high that we had in July of 2008 was a natural 84-year cycle measurement. It was at 120 degrees in its elliptical measurement at the time. Soybean prices declined into May 2010. May 2010 is one complete cycle of the 82-year cycle measured from the spike high of February 1920. We go back and we had a spike high here from February of 1920, and we had this was from the spike high. This low here was from a spike high of February 1918. So we had the 84-year cycle and 82-year cycle. From the low of May 2010 here, pardon me. From that low, soybean prices rallied to the spike high of August 2012. The spike high of August 2012 was a 7.5 year interval of the 84-year cycle measured from 2004. That's from the high that we had here in 2004. As an aside, in real time, my commentaries indicated that a higher high would peak in 2013. That did not happen. This high here is a 30-year cycle high, I had indicated that this high would be higher than this high. Did not turn out that way. But in any event, the highs of 2012 and 2013, they ushered in a major bear market that lasted all the way down here to February 2016 and then May, pardon me, 2020. From this was a low here in May 2020. It was an 84-year cycle measurement from December the 1st, 1932. And December the 1st, 1932 was a major bottom at that time. From the low of May 2020, soybeans have been in a major bull market, and that major bull market continues today. This particular data is through March of 2022, and we have just continued to move higher from that March period. Now, there are a series of major cycles that have cycle turn windows projected for mid-2022. These major cycles indicate that a major high will unfold during the next few months if it has not been made already. While not discussed here, there are 4-year measurements that confirm a potential high during the next few months if it hasn't already been made. It will be paramount for traders and producers of soybeans to be alert for signs that a high is developing. Now, I have been using soybean prices as an example here, but these measurements and these cycles, I should say, and the divisions, the intervals of these major cycles, they are found in all freely traded price patterns, their price indices. For years, I published a stock market newsletter, and I was very, very happy with the cycle measurements in that particular newsletter. It nailed the high in the Dow Industrials that we had way back in March of 2000. That was a significant high. It completed a major bull market. And during the rest of 2000, from March of 2000 to September the 1st, 2000, prices moved sideways. They were in a trading range. But there was a measurement of the 45-year cycle that aligned with the high of September the 1st of 2000. And in my newsletter at the time, that was accurate literally to the day. I had been giving a seminar in Kansas City at that time, and I was asked, what should people do? And I made the comment at that time, go home and sell your stocks. And that was a major high. That was September 1st. I was talking about, and those people that did it, they reaped good profits, and then they did not go into the disastrous 3-year bear market that we had from that high. But anyway, why the great time cycles are so important. In December of 1946, Gann wrote, quote, "The great time cycles are most important because they record the periods of extreme highs or lows in prices. The cycles are 90 years, 82 to 84 years, 60 years, 45 years, and 20 years. Let's take a look at the 90-year cycle. When we start from the sunrise or the horizon and measure to noon, we get an arc of 90 degrees, which is straight up and down from starting from the bottom. 90 months or 90 years is a very important time period. The 90-year time cycle is one of the very important ones because it is 2 times 45. Emphasis was added. That was Gann's statement about the 90-year cycle. This time period must always be watched at the end of long time periods. For example, 1932 was a major low in the stock market. It was also a low in soybeans, wheat, corn. It was 90 years from 1842. Study wheat prices around this time, 1850, 1851. Add 90 years and we get 1940, 1941. Note low prices in wheat around that time, unquote. Again, this is Gann's commentary. June 1885, 1855 was a high for wheat at $1.70. 90 years from this period gives 1945. Wheat reached a high in June of 1945, selling at $1.70. Some contracts at $1.68 and $1.69. 1850, 1851 had extreme lows for wheat. Add 45 years and we get 1895 when another extreme low was reached. From 1895, we again add 45 years and get 1940, and that was a major turning point in wheat. Now let's take a look at the 84-year cycle. The 84-year cycles and intervals of the 84-year cycles are one of the most useful measurements that one can find in a lot of stocks and commodities. I particularly like the 84-year cycle in soybeans and in corn. Now, he made the comment that this repeated 84 years from 1845 to 1852 in the Dow Industrials and brought low prices in 1932 and 1933. That was the Depression era low for the Dow Industrials in 1932-1933. The 84-year cycle alerted us to be prepared for low prices in stocks 84 years from 1932 to 1933. The 84-year cycle projected low prices in 2013 to 2017, and the Dow Industrials bottomed in January of 2017. Soybeans made a spike high February 1st, 1918. 84 years later, soybeans made a major low in December 2001. As an aside, 1/4 cycle from the low of December 2001 projects a turning point in soybeans during 2022, the current year. The strength in soybeans indicate that this turning point will be a high. Again, I emphasize that I find intervals of Gann's 84-year cycle to be very useful in most commodities and stocks. Now, let's take a look at Gann's great cycle, what he called his master time period. He referred to this as 60 years. He also repeatedly discussed the 45-year cycle and the 30-year cycles. 45 years was so important to Gann that he wrote a book about it, 45 Years on Wall Street. The great cycle, master time period of 60 years. Quote, "This is the greatest and most important cycle of all, which repeats every 60 years or at the end of the third 20-year cycle. You will see the importance of this by referring to the war period from 1861 to 1869 and the panic following 1869. Also, 60 years later, 1921 to 1929. The greatest bull market in history and the greatest panic in history followed. This proves the accuracy and the value of this great time period." And so he is saying that the 60-year, what he called his master time period, pardon me, it gave 1921 to 1929 as a time period to watch, and it was the greatest bull market in history. The 45-year cycle. The digits of 1 to 9, when added together, total 45. 45 is the most important angle. Therefore, 45 years in time is a very important cycle. 1/2 of 45 is 22 and a half years, or 270 months. 1/4 of 45 is 11 and a half years, or 135 months, which is 3 times 45. You will note how important these points are on the 360-degree circle chart, unquote. he was pointing out how important the 45-year cycle was and why it was important. The 30-year cycle. The 30-year cycle is very important because it is one half of the 60-year cycle or Great Cycle and contains three 10-year cycles. In making up an annual forecast, you should always make comparison with the record 30 years back. The 20-year cycle. One of the most important time cycles is the 20-year cycle, or 240 months. Most stocks and averages work closer to this cycle than to any other. Refer to the analysis of the 20-year forecasting chart. Now this is really interesting. Gann went to the library in London, England. He copied wheat prices from 1259 to 1851. I have a copy of this chart. He marked 20-year intervals on this chart, showing the importance of this cycle. And he just didn't make a little notation here and there. These 20-year intervals are very, very evident on his chart that he has from 1259 to 1851. Astronomical measurements. Gann cycles have relationships to astronomical measurements of planetary cycles. The 82-year cycle Gann discusses relates to one half of an orbit of Neptune. The 84-year cycle is an orbit of Uranus. 60 years relates to two orbits of Saturn, or three cycles of Jupiter and Saturn appearing at the same place in the sky. The 45-year cycle is analogous to the cycle of Saturn and Uranus. Gann's 90-year cycle is two cycles of Saturn-Uranus. The 30-year cycle, 29.5 years, is the orbit of Saturn. A 14-year cycle is the time it takes for Jupiter and Uranus to appear together in the sky, separate, and then come back together again. 14 years is also 1/6 of the 84-year cycles. Now, I point out that these are astronomical measurements because that is so important. And I make the comment here, W. Gann used astronomical measurements. He did not use astrology. One of the most common responses I receive when talking about these long-term cycles is something along the line of, Ernie, Gann cycles may be accurate, and the examples he and you give may have been useful at the time they occurred, but I don't think I want to wait another 60 years or 45 years to make a trade, unquote. Obviously, I would agree with this statement. In a future commentary, I will discuss how to use intervals of Gann's major cycles, project future multi-week to multi-month changes of trend. Now, tap here if you would like to receive complimentary copies of the latest edition of our newsletters. And don't worry about this, supplies becoming limited. We have, we have these newsletters on file, and we can email them to you when you give us your name and your email address. Now, a little bit of my background. I am the founder and president of Harmonic Timing. I was educated in corporate finance at the University of Kansas. Now I'm going to stop right there. On graduating from the University of Kansas, I went to work for the Treasurer's Department of Westinghouse Electric Corporation in Pittsburgh, Pennsylvania. The treasurer at that time, there was a gentleman by the name of Francis Dalton. Francis Dalton was a caricature of a robber baron. He was short. He was very heavy set. He always wore a brown pinstripe suit with a vest. He always had a cigar in his mouth. Now, the thing that was interesting about Francis Dalton was that he had a third-grade education, and he was smart enough to rise to become the treasurer of Westinghouse which was a major corporation at the time. But anyway, I digress. In 1969, I became a stockbroker for Hornblower and Weeks, Hemphill, Illinois, a New York Stock Exchange member firm. This association led me to study the technical side of analysis. I studied the works of George Lindsay, Edson Gould, Larry Williams, and the up-and-coming computer expert William O'Neill. In the mid-1970s, I left the brokerage business but continued my market studies. In the early 1980s, I developed a keen interest in cycles and the works of the legendary W.D. Gann. My passion for knowledge led me to study for a number of years with a gentleman by the name of Jerome Baumring. He was a PhD and internationally recognized authority on W.D. Gann. Jerry required his students to follow in Gann's footsteps by reading the works of Gann's recommended reading lists that were available. These books, mainly from the late 1800s and early 1900s, were very rare and out of print. Jerry had almost a complete collection of the books, and he shared them with us, his students. And what he did is the copyrights on these books had expired, decades ago, and so he made Xerox copies of the books, and so we all had Xerox copies of these books that were on Gann's reading list. Now, Jerry required his students to hand chart data in the way W.D. Gann hand charted his data. I hand charted the price of soybeans from the date of the first trade on October the 5th, 1936 through October the 13th, 1989. In February of 1994, I purchased the first book of Bradley Cowan. He had a series of books. Mr. Cowan has greatly influenced my analysis work. I consider Mr. Cowan to be the foremost expert in the use of Gann's natural cycles in forecasting various markets. He has the only software that I'm aware of that we can take these major cycles of Gann's, his 84-year cycle, his 30-year cycle, 20-year cycle, 45, whatever. We can take those and we can develop the increments of those particular cycles and overlay them on top of price. Now, I do the research at Harmonic Timing. I'm the writer of our publications, and I have published newsletters on soybeans and corn all the way back since 1992. I published a newsletter on the stock market beginning in 1999, and as I said, I accurately projected the highs of March 23rd, September the 1st, 2000, the low of March 2003, etc. Now, those who know future turning points can reap large profits. Thank you for your interest in Gann cycles. Tap here to receive our latest newsletters, Harmonic Timing of Soybeans and Harmonic Timing of Corn. This shows how we can use these major cycles and also the intervals of these major cycles, and they can be applied to all of the markets.